right, well, while we're waiting on that, we'll go ahead and get started. Good morning, everyone. We just have one quick item of business before the two main items on our agenda, and that's the approval of the January minutes. So Lisa sent those out, so hopefully everyone had a chance to review those. If they look okay, is there a motion to approve those minutes?
I move to approve the minutes.
Or a second?
Second.
No, okay. Any discussion? All right, all in favor of approving the January minutes, say aye.
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 Any opposed? Great. So the next item on the agenda, we have Jackie Brady here and James Glenn from PGIM. They are the portfolio's real estate manager, and they're responsible for about 10% of our assets. And Jackie and I had a short call a few weeks ago and thought it might be nice to have her come and speak with the commission. There may be some questions about real estate and office space and commercial and just kind of what their strategy is now in the pandemic and over the next few years. So with that, I will turn it over to Jackie.
Thanks, Jason. Good morning, everyone. I hope you're all well. It's good to be back with you. I was looking over my notes and realizing it was summer of 2019 when I last was able to visit with you in Charlottesville. And at that time, we had an interesting discussion about some of the ways that we were and had positioned the portfolios in which you are invested with us, all of which was without knowing, obviously, what 2020 would bring. But our asset management decisions to have a portfolio with no exposure to department stores, no mall exposure. We talked at the time about the Core Plus fund in which you are invested, pivoting into workforce or a broader range of housing options, and adding cold storage. You know, I wish I could play the lottery that way. It was all very, you know, kind of heavily researched decisions about the trends where we had chosen to position ourselves that, you know, kind of clearly have bolstered this portfolio through the early days of the pandemic, and clearly the ongoing effects are, you know, are still to be felt and realized. But I thought in discussing with Jason a few weeks ago, it might be helpful to have you hear from one of our PMs directly, James Glenn. He is the PM for our core real estate strategy in which you are a client. And we have a few slides to share. So James, I will pull up the screen share, Brian. I hope I get this right. And James, I'll let you take it from here.
Great, thanks, Jackie. And good morning, everybody. Thanks for having us. Okay, yep, there it is, Jackie. Maybe, I don't know if you can maximize it somehow, or is that? Well, it'll work. So we have a handful of slides, and I'll go through them relatively quickly, but please feel free to jump in and ask questions. And, you know, it's obviously been quite an interesting last 12 plus months. But when we step back and look at how, you know, the pandemic has evolved and some of the market implications, we're encouraged. There was a lot of concern at the start of last year, you know, in the end of the first quarter, and a lot of uncertainty. And frankly, you know, some of the views that came out of major declines in valuations and distress just never really materialized. And we turned the corner in the fourth quarter of last year, the core fund space, and saw positive appreciation occur again. And we're seeing, you know, more and more signs that things are turning around, and we're optimistic that, you know, 2021 can be hopefully a step back towards some degree of normalcy. I think, you know, the reason we haven't seen major valuation declines is there just hasn't been any distressed selling to speak of in a significant way. You know, the debt markets are still functioning and supportive. And then ultimately, some property sectors have only been bolstered through the effects of the pandemic. So we've seen a pretty major divergence in performance by property type. And so many of the trends, and Jackie mentioned, we had been positioning the fund for coming into this, have only been reinforced by the pandemic. And that is the industrial logistics sector has benefited from the even more focus on e-commerce spending. The retail sector has been impacted, more negatively. And then some of the alternative property types, which we like to invest in, like self-storage and life science lab buildings, they're all doing very well. And so that strength has offset, some of that weakness in retail and the uncertainty around, office space and how office users are going to, make decisions long term. So that's the backdrop. And then I thought I would get, more specifically into the fund. Jackie touched on this, and we had been positioning the fund. The cycle was maturing; it was long, and we were starting to position the fund for an eventual downturn several years ago. And obviously, we didn't predict that a global pandemic would be the catalyst, but it was, and thankfully we were well prepared. And I think that has paid off. We had been shifting our allocations, and I said again, those trends have only been reinforced. I'll talk about those in more detail in a moment. The fund had ample liquidity, so we had significant cash, and really weren't in a high risk position. We had low leverage coming into this, and all our risk metrics were in check. So we've been performing well through this, I think largely as a result to our positioning, coming in. From a strategic standpoint, specifically, we had been focusing our investments on the industrial and multifamily sectors and really the non-traditional property types. And then at the same time, reducing our exposure to traditional office and retail. And then from a location standpoint, we are overweight to some of the major gateway cities around the country, and we still like that weighting long term. But in recent years, and what we're continuing to do now, is invest in some of the smaller, more dynamic economies like Denver and Austin and Seattle, Nashville, Tennessee. And so that's something we had started several years back, and we continue, and we think that continues to make sense going forward. We're seeing growth in those markets. Another theme of the fund, we have a small allocation to non-core investments, and that is effectively developing industrial and multifamily properties. And that remains a strategy. None of our developments were disrupted because of the pandemic. We're still seeing, healthy return premiums for taking on some of that risk. And at the end of the day, we end up with brand new, well-located properties for the fund that we can then lease and hold as core assets. So that remains a theme of our strategy. And then ultimately, I think we're benefiting from the scale of our platform. We have 80 asset managers that are responsible for managing the strategy at the asset level and leasing, and they're specialized by property type and market. And so I think that degree of focus and specialization has really shined in this downturn and is serving us well. And I mentioned before, we're not looking to take on significant risk at this point. We're maintaining a low risk position in the fund. Next slide on 6, just some key facts on the fund. We're up at over $27 billion now. That puts us as number 3 out of the 26 Odyssey funds in our benchmark. So we have that scale. The risk metrics are well in line with our guidelines in terms of our stabilized property percentage and our debt ratio. We actually had a pretty active year last year on acquisitions. So we we were the beneficiary of pretty strong net inflows into the fund. We took in over $400 million on net. We had a lot of cash on the balance sheet, and we put it to work, and we ended up taking advantage of what was a small window in the market where some buyers had pulled back, and we were able to close on 3 large industrial portfolios, which helped us to get our weighting up. And they've been in the fund for about a quarter, and they're already seeing valuation gains. So that was a big part of the almost $9 billion of acquisitions last year. And with almost $850 million of cash on the balance sheet, we still have dry powder, and we are still pursuing transactions that are consistent with our strategy. On performance, we had a very strong relative year. Clearly, the 1% to 2% of the benchmark and the fund is a little lower than long-term averages, but I think in the context of what occurred, a pretty good result. And then again, on a relative basis, PRISA is outperforming. So for 2020, we outperformed by 133 basis points. That actually put us in the top quartile of our peer set in Odyssey. And then when you look back at the longer term series, we're showing steady, consistent outperformance. And for kind of that full cycle, the 10-year number, that 61 basis points of outperformance also puts us in the top quartile of our peer group. Flipping forward, I think what's interesting, I touched on this. What has been the key driver of performance in recent years really has been your ability to allocate to the correct property sectors, and that's something we've always been active with, and we've never really seen the degree of divergence in performance across the property types. So if you look at industrial properties rose in value by almost 10% over the last year, whereas retail properties fell in value by almost 10%. And if you were to look at some of the competitors, Jackie touched on it, we don't have any regional malls, the traditional enclosed department store anchored malls. Those have been struggling more than what we're invested in, which is mostly necessity oriented or mixed use retail with a grocer component. So anyway, if you were to look at that minus 9.5% for the benchmark, it's several percentage points worse. And so that 20 percentage point difference between industrial and retail, we've just never seen that before. And when you look at the market level, comparing markets across the country on a regional basis, the magnitude of difference is just much smaller. So that the key strategic decision, in recent years has been property type weightings, and we've been on the right side of that with our overweight to alternatives like storage has been doing well, and life science lab, our no mall exposure, that's all significantly benefited the fund. And then, I touched on build to core, even though it's only about 5% of the fund, those properties that we've been building and leasing really and getting in at cost have delivered significant outperformance. And that's been a big driver of our property selection too. The one area where, we have seen some write-downs, there you go, is in office. And so, we do have an overweight to New York and Chicago, and both of those markets have seen some write-downs. I think ultimately we are in decent shape on a relative basis. We have a pretty diverse portfolio of office buildings in New York. They're all well located and well leased, but the market is experiencing some uncertainty and not a lot of transactions. So I think it's going to take a little more time to have full visibility there. That's something we're watching. On the next page, just to touch on the underlying fundamentals of the fund, I think, again, we came into this pandemic with very healthy underlying fundamentals. So the fund had high occupancy. We were experiencing growth in the net operating income. And that took a bit of a shift last year with the pandemic and the downturn. And so we saw a roughly flat income, so down, just under 1%, and a little slight decline in occupancy of 30 basis points. So really, not too bad. And then when you look under those aggregate numbers, again, the theme is a pretty significant divergence by property type. So retail clearly doing the worst, and then industrial and office, doing better. The reason office is the highest growth there was we had done some leasing in our lab campus, which falls into office, and some of our New York buildings, which then the rental payments started, and that's what boosted NOI last year for office. We expect that to cool off a bit this year. The next slide, just touching a little more specifically on that property type allocation. So we're always quite focused and active on this. You can see the top row there, some of the movements we've achieved in the last few years, and really consistent with that strategy I outlined is, we've been reducing exposure to office. That's been through both sales and then also predominantly investing, outside of office. So we brought down that exposure by over 500 basis points in the last few years. We're now at a slight underweight to the benchmark. We'd like to continue that progress and pare back that exposure even further. On the flip side, if you look over at industrial, we've made major gains there. We've increased exposure 850 basis points. Those acquisitions I mentioned that occurred in the third quarter last year, those alone increased our exposure by 350 basis points. And we're now at a slight overweight to the benchmark, which we're happy with. But again, we'd like to increase that, over time a little bit more. Multifamily, we've been raising our exposure, and we'd like to get that up further. We are still a little bit underweight to the benchmark. And then retail, we were a larger underweight actually, but because of that, no mall exposure, we've seen bigger write-downs at the benchmark, so that the exposure has fallen even more, and our underweight has been diminished a little bit, but we've brought that down. And then storage, that's actually held up very well during this environment, which has been typical that we've seen in the past. Storage has done well, in upturns and downturns, and it provides, very, very stable cash flow, and we continue to like the space. One thing back on, sorry, Jackie, if you could just flip back. One thing that's a little hidden here is our lab portfolio is about 3 percentage points of office. So that's kind of hidden in that sector. And that's really how our benchmark is bucketing now. And so that's kind of a bright spot in office. And then we also have some data centers that are in our industrial portfolio, which are quite unique and, also providing good income. So that's part of those alternative property types. On our last slide here, just touching on ESG, this has been a big focus of the firm and the fund. We have long invested in our properties and processes to, achieve, success on this front. I would say what's happened in the last couple of years is we've instituted more technology and resources to help us, better capture what we're up to and the reporting. And I think that's really paid off. And now, when you look at our GRESB benchmark, we're now a 5-star rated fund. We're 4th out of almost 50 funds. And so, pretty pleased with the success there. The picture at the bottom is just an example of, what the type of projects we'll do. We're putting solar panels on the roof of one of our industrial projects in New Jersey. And so that will capture energy not only for the tenant, but also energy we can sell back to the utility. That's a pretty efficient process. That was it on the slide. So I'll just wrap with, we we came into this very well positioned. It was deliberate for a slowing market and a downturn. Obviously, the pandemic was a surprise, but we are benefiting from that positioning. We're seeing good signs. We're hopeful that vaccine rollouts will pick up and we'll see continued improvement in the economic climate over this year and see a little stronger returns out of core. With that, I know we went through quite quickly, but I'm happy to address any questions or thoughts you may have.
James, this is Scott, and thank you. That was a very good presentation. It looks like the positioning, the kind of conservative positioning, paid off and served us well. Do you see that pushing through the next 12 months as well?
Yeah, I think at this point, where we're willing to take, so-called risk is just to being on the offensive. And when we find acquisitions that are consistent with our strategy, we're gonna go forward and do those. And we were pretty active last year, and I think some folks in the market took a little more of a wait and see approach, but I think our conviction to actually go and invest has also paid off. So, not risk per se, but be willing to be active. I don't see us dialing up, say, the leverage significantly or, taking substantially more non-core risk at this point. But even when we see further, certainty in the market improvement, maybe towards the late of the year, maybe a little bit, but that is not the intent at this point.
Okay. Any discussion among your peers about continual downturn, or particularly as the pandemic kind of relieve pressure of a downward cycle that would typically occur?
Well, I think we're seeing it's this whole notion that you've probably heard, this K-shaped terminology, and so it depends on what property type. So I think the gains we're seeing in industrial and some of the alternatives are going to persist, and you're going to see significant growth there. We saw some weakness in our multifamily portfolio, and we're seeing signs that that's turning around. So I think you're going to see some improvement. And then where the jury's still out is retail. I do think we're going to see more stress on the tenant side and the retailer side, and the weaker centers are going to experience further suffering. And then where there's still a lot of uncertainty is how do tenants respond on the office side, and so we're going through that ourselves as a company. We're all at home and trying to figure out, going forward, how does the new environment look? And, that's where there is some concern. And if everybody downsizes their office footprint, we don't think that's going to happen, but, there's some risk there. I think we benefit from a very diversified office portfolio and high quality and good tenancy. And so we're not really experiencing substantial declines or issues, but over the medium term, if this triggers a significant reduction in office footprint, then clearly that's going to be felt. So that's something we're very focused on and watching.
Great, thank you, James.
Another question, as far as the demand from your investors, it looks like maybe you still have an entry queue. Is there a waiting period for new investors and current investors if they wanted to add more money to the fund?
Yeah, so we have almost $1 billion in the entry queue. It's largely made up of two big investors, and they've been postponing their entry. And so we've been calling all the capital that's been willing to fund, and we've seen that pick up. Honestly, go back to the end of Q1, everybody just pressed pause, and then Q2 we saw a trickle in of funds, and then Q3 really kind of turned around. And our expectation is that those investors will soon be ready to come in, and we'll be ready for them. We have ample ability deploy capital. And we have some investors that are asking for capital back. And so our expectation is, unless a huge amount of capital comes in, we don't have a kind of a wait entry queue right now. It's really more being dictated by the clients, but that could change, very quickly. We are seeing, optimism and, an uptick in requests and meetings. And, I think this could be a pretty decent year for core fund flows overall. Okay.
Other questions? Great.
Thank you very much.
Thank you.
Thank you.
Good to see you. And this is an awkward format, but can't wait to get back and visit with you again in person sometime soon. Be
Yeah.
well, everyone.
Thank you.
Thanks so much. Great. Well, the next item.
Sorry, really quick, it just made me think about like all this commercial that we have that, obviously it's all private sector driven that's gone up here. And I'm like, oh my gosh, they better be able to do something with that, because there'd be a lot of opportunity lost to do other things with that if not. But that's just our local situation.
Yeah. I think, we're probably looking at another 12 months of just the market trying to figure out what's going on.
Yeah.
And there's organizations as big as ours, right, that we haven't even started the discussion. How does it look coming back for the city? How does it look coming back for county employees? How does it look coming back for a lot of companies? I know of some that have already canceled leases on the private sector side in Charlottesville, and they're not going back.
Yeah. At the same time, like being this far away from people for this long, like I'm like jumping at the bit to like get back into some like in-person setting and being around people. So I'm hopeful that other people feel that way too, but I know there's some introverts out there that are just loving this. I'm just not one of them.
And then you also hear about people fleeing, big metro areas such as DC and New York, now realizing that they can work via Zoom and are seeking out smaller communities and so forth. So but at the end of the day, as Scott said, I think it's going to be a while before we see kind of how all that shakes out and what the net is in terms of occupancy and obviously impacts on city revenues and those different things.
I do think that Exodus actually does benefit us in terms of like, I even in my own neighborhood, just seen a lot of folks that have come from some of those bigger metropolitan areas and are now trying to figure out, oh, can I make a life here? Is that going to work for my company? Do I have to go back to New York or whatever? So You're right, Chris. I think it's just kind of a balance of like, where are we going to shake out in this, given the size of our city and what it has to offer. So we will wait and see. Thank you, Jason, for bringing them in.
Hi, David.
Good morning. My apologies. I don't usually forget things and I just flat out forgot.
I had one of those a couple months ago. I told Jason next time you should just ping me. I'm like, oh, I got another direction totally. And I was like, today's the day, despite all of Brian's nice reminders.
I know.
He tries.
You all want to give me your cell phone numbers? I don't mind sending a text on the day of, but the only way I can reach y'all is basically by email. So
for me, it was just a total, like, fortunately not often do I flake on something, but I just had it totally off my radar because it is one of the earlier meetings that we have and getting kids off to school. And I just suddenly realized, oh, I totally missed that today. But thank you. And Jason can get a hold of me. He knows how to get a hold of me. Just harass me.
I did this today to make you feel better.
Okay. I know your number. I could have called you. All right. Sorry, we digress. See, this is what I need. I need people.
I guess we're ready to move on to the next item then. I think Lisa has an update on the disability claim process and a few items for discussion. So I'll turn it over to Lisa.
okay, thanks, Jason. Just to recap what we've been doing for the past couple of meetings is we've been reviewing the disability retirement process and looking at tightening up a couple areas. So in the last meeting, it seemed like there was a consensus on moving forward on a couple issues. And so what I did was I drafted a few motions for you guys all to talk about. And if you decide that you want to move forward on any of them, then someone can make a motion and we can vote. Just to recap, the things that we were going to talk about making motions on are, we would like to possibly have an independent medical exam for people who are applying for disability retirement. And if we go forward with that, then there was a consensus last time that we would use an outside contractor to do those independent medical exams, so that if we decide to do that, then we have to contract with a company. And then also we wanted to decide if we can re-examine people who've been approved on a case-by-case basis. And then finally, we wanted to talk about following the rules, the city code, but requiring people who are currently on disability retirement to provide their total tax returns instead of just their W-2s. And then once we get through those things, I wanted to talk a little bit about the appeal process if we decide we want to go forward with that. So does anyone want to start the discussion?
Lisa, do we have any idea of how the business relationship would work with an independent contractor for medical services? Is there a monthly fee and then an additional fee for specific exam work? Do you have any information?
Yeah, I do have a little information on that. So when I was reaching out to the different localities, a couple of them are doing using an outside contractor. And so I asked for the contact information and I talked to two different ones. And on both of those, it's not a monthly fee or anything. It's just when we ask them to do it, there's a one-time charge for that particular examination.
Okay,
so it's not a long-term commitment and we're not paying any sort of annual fee. It's on a case-by-case basis. And Sarah, didn't we talk about, I think it was VRS, already contracts with someone and we were gonna look at their process for like shopping it maybe?
Yeah, so we talked to VRS and they told us a little bit about the company that they use and thought that maybe we'd be able to use their contract to use the same person or the same company. So that's a possibility.
That's interesting because I had a follow-up question about how we would procure this service. And so if there's a way to work through the VRS and not have to go through a procurement process,
yeah.
That'd be handy.
Yeah.
Good morning, Lisa. One of the questions I had was we're talking about, maybe using whoever the VRS contractor is, and I'm not familiar with them. Are they an in-state company, and the company itself, do they use physicians that are in Virginia?
I don't recall where the company's located, but I do recall that they definitely use local doctors.
Yeah.
Okay.
Both companies I talked to use local doctors.
Okay.
I don't have any further discussion on any of these three motions. Is anybody else, or do we want to move? Do
we want to handle it individually, or if anyone has any concerns about one or the other, or else, we can try to do them in unison, but I'm not sure if there is resistance to anything.
You want to put them on the screen just so everyone can see them? I can do that.
I think they're all three look good to me.
And just to confirm, Lisa, all three are already within the statute as it's written, right?
Yes, you're correct.
I believe someone posed the question. Does anyone have any objection? I don't think we're hearing any. Then I would move that we act on all three of these motions as one, if there's no objection to that.
Shall we just read them off for the record?
That'd be great.
Okay.
Yeah, that's good.
Move that the Retirement Commission for the City of Charlottesville contract with an independent medical examiner to provide the medical exam referenced in section 19-151B of the city code. The findings of the independent medical exam will be provided to the commission before an application for public safety disability retirement is considered for approval. I further move that current and future beneficiaries of a disability retirement allowance be required to undergo an independent medical exam at the city's expense on a case-by-case basis as determined by the commission per section 19-103A of the city code. And I move that the Retirement Commission for the City of Charlottesville require the beneficiaries of a disability retirement allowance to submit a complete copy of his or her personal and/or business federal income tax return each year per section 19-103E of the city code.
I would second all three of those motions.
Further discussion on those motions? Right. All in favor of approving the three motions, say aye.
I,
Any opposed? Okay, great,
thank you,
Lisa,
Lisa.
thank you for your work on that.
Yes, thank you.
great.
That's wonderful. So now let's just talk for a minute about the idea of having an appeal process. Because when I was reviewing after our last meeting, all my notes and all the stuff I've gathered, this seems to be a little bit more complicated than I originally thought. And I looked at a lot of different other localities' appeal processes, and they really varied from the most general, like 1 or 2 sentences, to pages and pages of process. Some have it written into their code, but many do not have it written into the code, and it's just an administrative process. So before we make any sort of motions, I really wanted to get a better idea from all of you, because last time there was a consensus on the things we've already had a motion on, but I felt like there was more discussion on the appeals and maybe not a consensus yet. So what I did was I put together a few examples of different localities, but what I wanted is a little more guidance from you on what you think we should do. If anything, if we need it, some localities don't have an appeal process, but I would say at least half do, or more than half. So hopefully you've read the samples that I provided to you, and I can give you more if you want next time. What I would say just from talking to people is that, like VRS, which I did not include here, has a really extensive appeal process. People can appeal multiple times. And what I would say is that if we're going to have one, I think people should only get to appeal once. And also, I think that they should have to provide some new information. You know, not just rehash what you guys have already looked at. Those are just my 2 cents on it.
Those are both good points. I concur that I see no reason for an appeal to hear the same argument rehashed.
Yeah, I'm not sure if, some of these jurisdictions, maybe the full commission is not reviewing it the first time. And so then you're appealing to the full commission. In our case, the full commission is seeing everything the first time. And so an appeal, I would agree, like there needs to be some sort of new information or something that we made a mistake or overlooked that they could point to. Otherwise, we're just going to hear the same information again the second time.
Yeah, and if we did allow that appeal with no new information, it could result in kind of commission shopping, right? Waiting till someone runs out of a term and someone new comes on board. We don't really want that either.
Right. And basically, I think what we all want is this just to be We don't want it to be emotion driven. We want it to be evidence driven. And once we do have this, once we contract with an independent medical exam, that just gives us like a really good foundation for whatever decision the commission makes, I think.
Mhm. Yep.
So is there any more information that you guys want me to collect before you come to a consensus?
Just one other note on that. I did see in one of them, it mentioned something about, sort of like a split opinion between the medical examiners. So for example, if the employee's doctor says, yes, they're disabled, but the independent medical examiner says, no, they're not, and there's some sort of conflict there, I could see where maybe an appeal might be warranted if they can provide new information. If they agree, I think that we would just go with, if both doctors say, that they're disabled, like we would approve that. But if there's some sort of split, it seems like maybe, that might be something where we would want to have, more details on how an appeal would work. But if both doctors say no, they can't apply, can they? Or do they have to have an affirmative decision from a doctor to even apply for disability?
I'm pretty sure anyone can apply, but I don't think anyone does unless they feel confident that their personal doctor will write a letter saying that they can't perform their duties.
Okay.
This is kind of new to me. So right now we do have someone who's applying, and I was hoping to present their information at today's meeting, but it's not complete. So we're gonna either have to call a special meeting in March or wait until the March meeting for that to be reviewed or considered. So you guys have probably all know more about this than I do, actually.
I'm sure that's true.
I'm of the mind that I'd like to study this a little bit more in depth, especially consider this Falls Church process, which I honestly didn't get through prior to this meeting. So
I just looked at it. I just looked at it quickly, and it seems to encapsulate, Lisa, what you were talking about. The things about it that I don't think are necessary are these 90-day periods and then 90-day period on top of that. And I mean, we've been fairly quick in every instance, and I think we would be going forward too. So, but there are things in there that say what you just said a moment ago about what an appeal should contain, and so maybe Falls Church shortened would.
So use theirs and make some changes to it, and maybe just present that at the next meeting? Or do you want to see others? Do you have any other input that you want to give me before so I can take the next step?
So Lisa, to be clear, this would be an amendment to city code, correct?
So that's a good question, because I found that not all localities have it written into their city code. So there was one that just, like, if you look at the very last thing that on this handout, they had in their code, subject to the limitations of this chapter, the commission shall establish rules and regulations for the administration of the retirement system. And I guess that gave them the authorization to come up with a process and follow it. So
I guess I asked that for just a point of clarification, but then also, even if it's not an amendment to city code, I do think that it would probably be wise to seek out some legal review of it. Because obviously we have administrative appeals processes all over the place. And so we will obviously want to make sure that it passes legal muster, but also is just somewhat consistent with kind of how we do business with various other either personnel appeals or even other administrative appeal processes.
Okay, so what I might propose, and you all let me know what you think, is I can write up something based on your feedback today. And we're gonna have to have Allison come to the next meeting regardless, because she makes a recommendation on people's claims. So I can provide it to her in advance, and maybe she can help us make sure we're doing it right.
Yeah, does
Yeah,
anybody
so-
disagree? I'm not trying to create bureaucracy for the sake of bureaucracy, but I'd certainly, if somebody has a different opinion, I'd certainly like to hear it.
No, I think you're on the right track, Chris and Lisa. So I think what I'm hearing is Lisa would go back and make a first initial pass at edits from based off this meeting, verbal conversation, and then reissue that to us for review and further comment. Right? I think that's a great next step.
Okay, great.
And maybe a deadline for us to make sure we get our work done on time and it doesn't stall. Maybe before the next meeting, or I guess maybe some time before the next meeting, so you can have some time to analyze the return, Lisa.
Sure.
Perhaps a week before.
So you want me to write something up and give it all to you a week before?
I was saying you would write something up and give it to us when you're done, and we would return any comments we have back to you a week prior to our next meeting, so that you'd have some time to digest it.
Great, then. Okay, the one thing I'll have to check, because there are some rules about the Freedom of Information Act about I have to post and things within a timeline. So I just don't want to break any of the Freedom of Information Act rules. So before I say yes, I'll do that, I have to just check with Brian Wheeler and whoever else might know about the Freedom of Information Act.
Absolutely.
You mean for the materials before a meeting to be posted?
Yeah.
Yeah, okay. Yeah, I mean, yes. I mean, I think that the agenda will say what's going to be covered. I mean, you can definitely check to see what, I mean, there's many times in council that we have items that are added or modified, and there's placeholders up until like one business day before, but Brian can comment, I guess, more officially.
I heard part of that. The general guidance is when something is shared with the commission, it's shared contemporaneously with the public. So the advertising of the meeting has specific, 3-day window in advance. But as far as the materials, you would consider it any meeting. The public just has the expectation they can get them the same time the commission does.
So any drafts that we're doing, we would just be doing, through email, and then providing our feedback individually. And then when there's a more final thing that you want to put forward in front of us to be considered, then that's the version of it that Brian would be referring to, not the working documents.
Correct.
Heather.
Well, thank you very much. Yeah.
Important,
Go ahead, Oscar.
important that you follow the working documents procedures and policies, and Brian can steer you to that if you're not sure.
Okay, well, I think that's great.
Thank
happy
you,
to do that.
Lisa.
You guys are welcome.
The only other item that I had for other business, I just wanted to share real quickly. We're about halfway through the year, through the fiscal year that is, and we've just closed out the calendar year. So hopefully you can see the financial report on the screen.
Yeah.
So these are the calendar year 2020 returns. We're halfway through the fiscal year, so the fiscal year to date column is representing the return since July 1st. You can see, this is on page 8 of that very long attachment that you got. But just a quick summary. So the fiscal year to date return for the fund, 17.8%. The 1 year return, 14.5%. So the fund is doing very well. Similar to what you've seen in the market yourselves. So that's mainly been driven by emerging markets, small cap, mid cap, everything did really well this year. So You remember our assumed rate of return is 7.5%. So we're well above that at this point. I think January, February have been similar in nature. So I don't know that that number has changed too much since December 31st. So we're just keep an eye on it. We did speak with Greg several times during the quarter, and Chris and I spoke with him last week. We are going to be looking at doing a slight rebalancing because some of the asset classes have done quite well, and so there's some that we need to move some money from and reallocate those to stay within our target allocation. So that's something we're going to be working on over the next few weeks. So no, there's no action that's needed by the commission. That's all administrative and within the fund's policy guidelines. So happy to answer any questions, but that's pretty much all I wanted to share on that.
Jason,
Mm-hmm.
does this now reflect that new SSGA index fund?
I think that was very close to the end of the quarter. I don't remember the exact date. The next report that we get should include the change to the fossil fuel free index, which will be interesting because I do think fossil fuels did well in the first quarter. So, but yeah, I think the next report you see will have that return reflected.
And which of these is Axiom?
Axiom is emerging markets. So they're in this one here.
This looks pretty good, but when I was looking at it earlier this week, for some reason that one stuck out as, well, I asked about it, so it must have stuck out. And not in a good way.
Oh.
But what I'm looking at here is, would be sort of, oh, never mind.
You might have been, maybe you were thinking about Artisan Partners.
That's it.
Or Atlantic
That's it.
Capital, maybe. Yeah.
Artisan.
Yeah, I can look at it and send you an email.
Though this does, well, never mind. It knows what I was looking at.
Was there any other business?
Hey, Jason, I just wanted to share with everybody that the fiduciary liability insurance for the commission expires on May 2nd. Coming up, I sent in the renewal information yesterday to our insurance broker. So we've got plenty of time to get folks to respond to it. And I'll share with you the results and the renewal status as we go along.
Thanks, Chris.
Thank you.
I have nothing else.
Look at us, not even 9:30.
Oh, one other item was, and this might be for you, Lisa, was Chip invited to this meeting?
Yes, he was invited and he sent his regrets, but he'll be at the next one. So we'll be welcoming him next time.
Yeah.
All right.
I know I've been in a few meetings with him in the last week or so, and you know, some meetings he's been invited to, some he hasn't. So you know, he's still getting his legs under him. So just want to make sure.
Yep.
Thank you.
Thanks for asking. I was actually wondering about that too. Right now we need 10 of him. He needs to be in so many places, so we'll get there.
Popular guy.
Now, do we want a motion to adjourn?
So moved.
Second.
Favorite?
Aye.
Bye.
All right, thanks. Bye.
Thank you, everyone.
Thanks, y'all.
Thank you.
Thanks, Brian.
Bye.